Good morning, everyone. Let's see where the markets are this morning, and I'm going to give you a little lesson on interpreting gaps in the morning. So futures continue with the sloppy sideways action here. As far as the futures go, we couldn't get a close below the major support. We had the prior big up day. It looked like we were going for a shot up to new highs. Yesterday, all the way back down, breaking down through the 50 MA, through the major support, and buyers stepped up into the end of the day to push prices back up above. And right now, we're just trading inside the range. You can see the pre-market trading that's going on here. Nothing going on, really. A little push up, coming back down to support. We'll see if buyers want it here. But overall, just continued sideways, choppy price action. Let's look at the NQs. And here's, where more of the damage is being done in semiconductors and tech. And, it's overall sloppy. It started with the big bar down, the attempt to hold. It looked like it was going to go. Topping tail, right back down again. Whip back up and whip back down. And, we really want this whippiness to tighten up before taking a position as far as the underlying. However, even with patterns like this, when they set up, as far as option trading goes, you don't have the same restrictions as you do with the underlying. And the reason being, to trade the underlying you want a relatively tight stop, meaning, you could put a stop up here, of course, which means a much smaller position to start, and then look to add to the position once prices would start to move lower, and then you would get a retracement and so on. Whereas with the option trading strategies, we could put on a position with a spread up in this area here, if it's set up with the premiums there made sense, of course, and the return. But we could just let this chop around and do whatever it's going to do. And if it just went sideways, whatever, as long as it doesn't come up here, we keep the money. So a different type of trading instrument, and all trading instruments have, their own nuances. If you're interested in that, you go to the Master Trader site. We have a terrific course. It covers everything with trading options, every strategy, management, and so on. Oil continues to inch its way up into the resistance area up here. This is where the sellers are going to be, and they just, should be right at the bottom here if this is really going to be weak and try and roll again. But considering the fact that it's in this major support point, we'll see how far it can get. Could be a part of a bottoming process again. But, if you were a buyer down here, and, this is where you want to be looking to take part of that position off, or all of it, and especially in front of, the holiday. You'll see what happens after we all come back. And let's take a look at bonds, which have retraced. They're back down to our new major support level here. And this is where buyers should begin to step up, and we see that's beginning to happen here. It's probably going to take another day or two, but look at the angle at which prices came down at. Pretty steep. So this move above resistance, which certainly it was looking like it can go higher. The move back down, the angle of retracement, the depth of retracement, all of that says that this is going to take more time if it's going to be able to rebuild this from this damage. And I call angles of retracement and depth of retracement within an uptrend damaging to that trend. Now, it suggests they break below that support. That could happen, but now it's come down 4 days in a row. It's into this support level. Buyers are down here. You can see that. Right? And now, can they continue to step up, that demand increase and get a turnaround pattern down here where bonds can move back up again? So time will tell. So for right now, you just stay away unless you're an intraday trader, and just wait for the daily chart to set up here. So let's talk a little bit about gaps and a few things that are gapping up here today. Nike, right, gapping up when as high as 57.69. So when we look at gaps, a few things that you want to take into consideration. One of them is, what was it doing prior to the gap? In this case, it was moving up, right, multiple days in a row, but in a very choppy fashion. And it started to go sideways for a few days right there. Really not a lot of resistance here because of the way it came down. This swing high where it went up and right back down again, but there's resistance right here and there's resistance right here. We also look at what was the prior day before the gap, and in this case it was a down bar, not a significant one, more of a neutral one, but still a red bar. Prices have gapped up into the resistance area. They've cleared this prior resistance here, and so what we're really looking for is a gap above all resistance, and ideally not an extremely large gap, one that clears the resistance and has got room or a void to run above. So as far as Nike goes, as an evaluation of gaps, we see it's pulling back into this area here, 56 area. So right around here. So what was resistance could become some support. It could be holding here. And now is the question, can you trade it between here and here? Do you have a strategy, a plan to trade it between here and here and see what it'll do? So it's not a great gap as gaps go. It's tradable if you know how to do it, but it's not one of the best. Let's take a look at another one here. We have E-Trade. That's gapping up here, and where's it trading here? It went as high as 39, so it's cleared this, and it's got a rounding bottom here. It was trending up. It's a red bar, so there's a bit of a shock. And we look for that shock element to it, bit of a red bar shock, gapping above that. So that's a plus, but it was trending up, so it doesn't get a plus for that. What it does get a plus for is that it's got room to go. Right? So as I stretch this out and go back years here, there's really not much of anything. You can see this stuff over here. This is going back to 2008 and 2009. How significant is it? So, you know, as my interpretation, it's not all that significant, because if you were a buyer here, what would you have done? Right? Oh my God, right? Is it going to hold? Is it going to hold? You're throwing in the towel. This is a climactic kind of pattern. Some hold on, you know, when it bounces back up again. And here's the retest it can't get through. Some get out again. It's going back down. It's going to go to zero. It almost got there, around $5, $6, whatever that is. Bottoming action here. Oh, you know, I better get out on this rally and get out. And then it starts to rebuild. Now it's looking pretty good. So, possible double top. But now it's gapping above that. So now, see what kind of pattern forms intraday if you're a gap trader and looking for this to be on the long side. All right, no pattern, no trade. Let's look at another one here. So here's one that's gapping up, right? And it was a run up here, right, over several days, and it's gapping up to around $40 into the next resistance here. Don't like it. It's got a mess here. It's zapping up into resistance. It was running up into this gap. Ideally, it would have gapped above this area here, and then would have chopped around a little bit or pulled back. Something, even if it would have gapped to 44 and then pulled back into this area of 42, and then you would have got a reversal or a bottoming tail, that would have been the type of a play as well. Let's look at another one. Okay, so here's an extended one. Well, wouldn't this have been great to have been short last night? And what a gap down. And what would you do if you were? Gapping down to $18 if you were short last night. Yeah, you're going to cover that short and put that money in your pocket. If you're not, well, that's just dumb. Okay? So, will there be buyers here? Well, there's already showing up. Some buyers are showing up here. Do I want to play it from the long side? No. So I don't like that. I don't really care for this one either. And I think the last one I was going to look at was not a great gappers here today. This one's a bit more interesting, or I was going to say inviting, possibly 23-ish. 23-ish. It's gapping right up into this resistance area here. So it's from a base, so it was resting, but it's not ideal either because of this resistance. But if it could go sideways, this could be one, especially if the market was to be up at the time. I don't know what this company does, but maybe a 30-minute high play looking for it to go higher. So in coming recordings, I'll look at some more gaps and give you some guidance, and especially when we find, a great looking one. The thing is to put that into your playbook and look for those setups to happen and play them accordingly. And that's the essence of what professional investing and trading is about, using technical analysis, is to find setups that historically have worked well and then wait for them to set up again. And that's really the discipline part of trading, is waiting for the setups that work. And that is what makes for a good trader. You say, well, why is someone a good trader? Well, because they have some type of a setup, whatever it's based on. Could be many different ways, of course. But they sit and they wait for their setup to play out, and they just trade it accordingly. And if there's no setup, they don't do anything. And you say, well, they make money consistently. What is it? Is it their system? In part, of course, but they follow it. There's so many different ways to trade, but they don't take impulse trades or, things appear to be moving, and that doesn't work. They wait for their setup and they take their trades accordingly. All right, everybody. So I believe the markets are open Monday, closed Tuesday. Kind of strange. Anyway, you have a great weekend and have a great 4th of July. Enjoy, be safe, and we will talk next week.